Kenya's capital markets have improved in the second edition of the Absa Africa Financial Markets Index. It's been ranked third among the 20 countries surveyed. Now, South Africa was still ranked first. Ethiopia rounded off the list. The 2018 edition of the report pointed to relatively weak participation levels by local retail and institutional investors as one of the impediments to the development of capital markets in a lot of the countries surveyed. That report did come out on the same day. Well, the International Monetary Fund also pointed out that the Kenyan shilling, in its view, was overvalued by about 17%. Let's dig into the details of this particular report. George DeSantis is the head of market at Absa, excluding South Africa. He's part of the team that worked on this particular report alongside the official Monetary and Financial Institutions Forum. Thank you for your time.
Thank you, Rama.
Right, so there's a lot of things in here that were particularly interesting, but let's start with the local participation side, because as far as pension funds are concerned, there was this interesting line that really stood out for me. There's a shortage of investment vehicles tailored to investors' needs, and they say that this forces them to overinvest in specific classes like treasury bills and bonds, for example. What exactly do they want to see?
Yeah, once again, thank you to you and also to your viewers. I think one of the key things that as a manager of a pension fund, you will be thinking about is ability to outperform a risk-free benchmark, right? And that talks to your ability to get access to corporate debt markets, which will normally pay you some basis points above where the government is.
Yeah.
And what we've seen in the Kenyan market is that there is not enough of those assets available for pension funds to be able to invest in. So almost every pension fund or asset manager is then compelled to go to the risk-free market where they acquire instruments and their performance really just tracks a risk-free yield, which doesn't give you the alpha as you mentioned. So that is one part of it. This other part has to do with one of the biggest risks of any pension manager, which is ability to manage inflation and or to be able to pay your liability by matching inflation yields or the inflation performance over time. And what you also find is that in the Kenyan market, there is no asset that particularly tracks inflation. So then it leaves a gap from a pension fund manager perspective. Then you can also talk about instances where, as a pension fund manager, you may see a risk on the local currency vis-a-vis the dollar. And therefore, you may want some exposure to a dollar asset, right? And that also is quite limited in the Kenyan market.
Because you're limited in what sort of assets you can invest in, and more often than not, they're geographically bound to that specific country.
Correct.
Right, but there's also something else that I couldn't help but think about within the context of the report. Is it that pension fund trustees don't understand the available assets that they can invest in, alternative assets aside from vanilla equities and vanilla bonds and so on and so forth? Or is it that there's simply no pressure on them to actually deliver that alpha?
So I think you've answered both, or the two possible answers. You've actually constructed them nicely in your question. So the first one has to do with the culture of playing with what you are familiar with, right? Today we are quite familiar with the treasuries or risk-free instrument. That is what is available. So I will always be comfortable actually investing in that. And it looks like that is the mandate that asset managers are getting from trustees and other asset managers, right? So trustees are then passing it on as a mandate to their asset managers to manage with that kind of mindset in their mind, which is just do what you are comfortable doing.
Be conservative.
So be conservative, right? So there is that part which has to do more with culture, and there needs to be a shift from that conservative culture to go into more instrument that will diversify your risk. So there is that culture aspect that we need to deal with. Then the second part is also what you try to answer, which it has to do with the benchmarks that are set for trustees, for asset managers. Most of these benchmarks are really around your ability to perform up to the risk-free level, right? It is not like 400 basis points above risk-free. If it is 400 basis points above risk-free, then you will be forced to actually think about things beyond where the risk-free will offer you. So it's actually both. It's culture and it's also the benchmarks that we normally give to
Right,
these.
so clearly we need to light a fire in
managers.
our trustees, so to
Yes.
speak.
Yes.
But looking at the tax policy as well, because one of the counter arguments they may have is that, look, the tax policy environment in which we operate for securities is also somewhat limiting, and it's also fairly uncertain. So, for instance, when capital gains tax was reintroduced into Kenya after about a 30-year hiatus, it was being reapplied on stocks, trading of stocks, and that almost triggered a strike on the stock market. This year we were dealing with excise tax of about 0.05% on transactions over $5,000. And all of this uncertainty is something that fund managers constantly complain about. Is that a valid complaint?
Well, it is valid. I think the first point which we need to recognize from a Kenyan market perspective is that Kenya is in competition, right? So when it comes to investment flows into the continent, there is a Nigeria, there is a Tanzania, there is a Uganda, and a South Africa. And investors basically look around and see where is it easy for me to really invest, right? And then they look at Kenya, they look at Nigeria, and they see that Nigeria wouldn't charge you anything from a tax perspective, but Kenya will. Guess what they will do? They either move their money to Nigeria, or when they are coming to Kenya, they actually say, you have to pay me more, right? So that there is that element of competition, and your ability to actually benchmark yourself to competition is very key.
Right.
And I think that is what probably the brokers were trying to fight. Then there is the other part which deals with not just the taxes, but the clarity of processes to recover my taxes when I've paid them. And what we've seen is countries like Nigeria actually coming up with very clear rules and a lot of DTA, double taxation agreements, that enables asset managers to recover their taxes where there is one, right? So I think for Kenya to position itself as a competitive market is either it deals with removal of taxes, or if there are taxes, have clarity in process in terms of how I recover my money.
Okay, one last question for you, because I know we covered the currency aspects of this report as well a little earlier, but the IMF, of course, released its report late last night, and they said in their view, they see the Kenyan shilling, especially the interventions that we've seen, the unsterilized interventions from the central bank, as being relatively overvalued. Your report pointed out that one of the things that you find attractive about the Kenyan market is the ease with which capital can flow in and flow out. So, with that perspective, do you agree, A, with the IMF's perspective, and B, is this really an impediment to investing in this market?
So the IMF's view that they've put out is a view, and I think they are entitled to it, and that is great. From our perspective, the way we look at it is whether a currency is managed or floating, it is really not the point that investors will normally look at. What they look at is consistency. If you have managed, then you have to manage consistently through time, and they should be able to anticipate what you do, and that goes into the evaluation and into determining whether
there has to be clear communication about that policy.
Clear communication of that policy to everyone, right? But what we found in the Kenyan market are a couple of things. Number one is that Kenya has a very deep foreign exchange market. So if you want to execute a 100 million deal in Kenya today over a 1 week period, can you do it? Absolutely, yes, you can. Is there a single unified exchange rate regime in Kenya where you and I can observe if we want to do a transaction? Yes, absolutely, you can. Is there restriction on your capital when you bring it here and you want to take it back? No, there isn't. And those are some of the things investors really look at in determining whether Kenya is a market that is investor friendly or not. So really, the answer is not really to say manage is good versus floating. It's about certainty, and it's about ability to bring money in and clearly take money out and be able to value my money if I bring it in or I want to take it out.
All right, we'll leave it there for the time being. George Asante from Absa, thank you very much.
Thank you.
Appreciate it.